So what, instead of correcting, usually a nice correction is a sideways downward movement, and
Yeah.
then it'll continue to go higher. These running corrections are really good at confusing people. And I actually see them as a bullish sign. And when this running correction is done trying to chop and confuse everybody, it will continue to extend in the same direction as the previous run. So it ran up, it's correcting as it's going higher, trying to shake people out, and then it'll pick up speed and shoot up to 2650, 2750. It's pretty exciting. I mean, after
Mhm.
this, who knows where it's going to go? This will be 3,000, 5,000 mark. This is just where these charts are pointing to.
ChrisVermeulen, a renowned financial expert and founder of the Technical Traders, offers an optimistic long-term outlook for the precious metal. Recent market activity has seen gold edge slightly lower from a three-day high, near $2,430, while maintaining support above the crucial $2,400 level. This resilience comes amid strong speculation that the Federal Reserve may begin reducing interest rates as soon as September, which typically bolsters gold prices. Vermeulen's technical analysis, utilizing Fibonacci projections, identifies key resistance levels between $2,660 and $2,750. This suggests gold could have an additional 10% upside potential before encountering significant resistance. The expert views potential pullbacks as buying opportunities, particularly for physical metals and mining stocks. Vermeulen's long-term projections are particularly bullish, speculating that gold could reach $3,000 to $5,000 in the future. However, he cautions that long-range forecasts become less reliable beyond the next major chart pattern. Supporting this bullish sentiment, FX Empire reports that Thursday's advance followed Monday's successful test of support at the convergence of a lower consolidation trendline, the 50-day moving average, and the 61.8% Fibonacci retracement level. The strong move, characterized by a wide-range green candlestick pattern, suggests gold may be poised to challenge the $2,450 prior swing high, with Monday's peak of $2,459 serving as the next significant target. Adding to gold's appeal are escalating tensions in the Middle East, particularly concerns over potential Iranian retaliation for the recent killing of a Hamas leader in Tehran. Such geopolitical instability typically enhances gold's status as a safe haven asset. Please tune in for our exploration of ChrisVermeulen's expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. We appreciate your support.
I'm bullish on it. I think it's still a bullish price action. I think a lot of people are watching it, so there's a lot of price action shaking on the way up. And I find what happens when a lot of people see a move, the market will kind of naturally want to it'll channel its way up. I call it a running correction. So the
Mhm.
market will come up and then it sells off. And instead of forming like a bull flag pattern, Craig, actually just like down over here where it
Yeah.
rallies up and then it kind of goes sideways and consolidates. I think when a lot of people are watching it does this running correction. So it'll run up and sell down to try and scare you out. It'll make a higher high and then sell down, try and scare you out, a higher high. And we keep seeing that. And so what, instead of correcting, usually a nice correction is a sideways downward movement, and
Yeah.
then it'll continue to go higher. These running corrections are really good at confusing people. And I actually see them as a bullish sign. And when this running correction is done trying to chop and confuse everybody, it will continue to extend in the same direction as the previous run. So it ran up, it's correcting as it's going higher, trying to shake people out, and then it'll pick up speed and shoot up to 2650, 2750. And I think one of the reasons why it's pulled back here in the last few days is we have had a lot of panic in the stock market, in the VIX. Money flows have been moving out, and nothing is really that protected when there's chaos and that level of panic selling. Even some of the best investments, like long-term investments for protection, like gold, will get pulled down just because there's liquidation going on.
Yep.
And gold has held up exceptionally well. We're only like 3 days out from like all-time highs, and it's only pulled back 1% or 3. So I like gold. It's kind of the one to be in. I mentioned this last time you and I were talking. I think I said if I had to pick one, it would be gold, because it's the lowest volatility, which means you have very little risk. A couple big bad days in gold, you're going to only be down a couple percent, and it has nice upside potential. The short-term trend's bullish, the long-term trend's bullish. We're in an economic environment where people are naturally moving into it, and we've got, all kinds of chaos happening. So
Yeah.
everything favors gold. I like it. let's go back out to the monthly chart here. And just to give everybody the quick kind of high level view of where we are, because I think it's important, is we started a new super cycle in gold back in 2019. It's had a multi-year consolidation. And I think most of us who are fairly in tune with the market, we know there's some type of big correction coming. And so people are moving into gold, anticipating weakness and all that stuff. And I think gold's going to go a little bit higher. And then eventually we're going to see it correct with the stock market for one last pullback. And where we are right now, this run up is very similar to what we saw in the past, just before the 2008 financial crisis. We had a multi-year pause after it started a new super cycle, and it ran up because people see the economy slowing. They see financial things starting to break down. Banks are going to go bankrupt. And then we had the financial crash, and it pulled gold down with it. And then it rocketed higher for several years. So that is what I'm expecting is going to happen to some extent here, that gold does have more upside, but I do think it'll get pulled back a bit with the recession. And then it's going to be off to the races, 35, 5,500, however far it's going to go, but it's going to be pretty substantial. And to give you those Fibonacci targets, we can go here, we can grab this low, we can take this high and this low, and this will carry us forward to 2667. So this is that next significant resistance area. We could even draw one from this level here to here using a more conservative level, which is, it's tagged that first level right now. So it is kind of finding a little bit of resistance based on this shorter term price chart. And then of course, if we were to kind of go to the big picture of where gold long-term wise, it goes right up here to 27, 28, 2750 area. So the real key levels, if we use the full size pictures, is 2660 to 2750, 2725. So we still have more upside potential, right? We've got potentially another 10% or so for gold, and then expect it to have, a 2008 type of crisis. It'll probably pull back and consolidate, but we want that. I believe that's going to be like the last opportunity to pick up on physical metals. It'll be the time to get into precious metal miners. I think it's pretty exciting. I mean, after this, who knows where it's going to go? This will be 3,000, 5,000 mark. This is just where these charts are pointing to. We can't really project much further other than these until this next chart pattern unfolds. Then we can draw new lines and get the next upside target.
ChrisVermeulen had previously highlighted the significant volatility in the stock market, particularly in the S&P 500. He noted the occurrence of large price swings, characterized by substantial downward gaps followed by rallies and drops, all accompanied by high trading volumes. However, the mood shifted positively on Thursday when official data revealed that U.S. unemployment claims rose less than expected. This news sparked a rally in U.S. markets, with the benchmark S&P 500 index surging 2.3%, marking its best day in almost 2 years. The Dow Jones Industrial Average climbed 1.8%, while the tech-heavy Nasdaq experienced an impressive 2.9% jump. The optimism spilled into Friday's trading session, with the UK's FTSE 100 index increasing in early trading. The FTSE 100, which comprises the country's largest publicly listed companies, including major banks, airlines, and house builders, reflected the improved investor sentiment. Let's get back to the interview.
When we look at these markets, especially the SP 500, there is no clear direction. We got a lot of volatility, huge gaps to the downside, big rallies and pops and drops happening right now, massive volume. As you saw, Craig, probably the last couple of days, we saw the VIX up 176% in pre-market yesterday morning, or not yesterday morning, but I guess it was on August 5th or 4th there, huge spike up. And that is like indicative of a washout low, a short-term oversold condition. We saw volume flows on the New York Stock Exchange spike over 67, which is a ratio that I follow. So there's 67 shares hitting the bid, people just hitting the market order, get me out, to every one person buying on the ask. And that ratio is 63. To put it in perspective, anything over 3 is panic. So 63, which doesn't happen very often, very rare, is definitely a level that people were running for the fences. Usually that's the sign. Usually a market bottom gets put in when there's big panic like that. You and I were talking, I think it was somewhere just right in these couple of days, right where it popped right up here. And
Right.
what's interesting is we saw the
Yep.
Russell 2000 flatlining, and suddenly money started to flow. We had huge sell-offs in the SP 500, the Nasdaq, because of money flowing out of the Magnificent Seven. People were then suddenly going, okay, well, if those are topping, I want to move to the next aggressive kind of growth type of stocks, which are generally seen as the Russell 2000 small cap stocks. And everybody piled into the Russell 2000. And what's really interesting, and you and I talked about this last month, which was we saw this happen back in 2021. We saw the Russell 2000 put in this topping phase, and then suddenly everybody, for some reason, got all bullish and they piled into the Russell 2000, which was very short lived. And then we went into a year-long bear market phase, and the market sold off significantly. And so we've seen that again right where we are right now, that same scenario. And what's really interesting is if we were to just go way back in time, back to 2008, you can see similar type of price action in terms of with the Russell 2000 traded sideways, just like what it's doing right now. And then suddenly it had a big pop and everybody kind of moved into small caps for some big flush out session. And then suddenly we went into that bear market phase. So this is just telling us that people were becoming very bullish, and they were simply rotating out of the large caps and saying, okay, well, I think there might be done. I'm going to move to another pocket in the stock market that has potential. So it's kind of interesting how we're seeing this play out. And what really coupled this, and it happened between our last talk, Craig, and right now, is the utility market.
Investors and traders closely watch gold's performance as the market navigates through these complex dynamics. While short-term fluctuations are expected, the overall sentiment remains positive, with many experts seeing potential for significant upside in the coming months and years. Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.